So why is everyone talking about Lucid stock? Well, it could be for a number of reasons, but I think I've highlighted the top reasons why people are talking about Lucid stock, and I'm going to include them in this video. These insights, the reasons why I think people are talking about Lucid stock, come straight from Lucid management, right? So this is straight from the CEO, the CFO, based on what they say is going on with the company. So let's get right into this video. You're not going to want to miss these insights about Lucid stock. So on February 22nd, Lucid held an investor Q&A session with Wall Street analysts, and one of the questions, the first question that came was from Bank of America asking about the decline in reservations and that demand might be a little bit weaker than expected. So for the longest time, Lucid had a backlog of orders, right? Because it wasn't able to meet customer demand. Customer demand was above where its production capacity was. And so it's been persisting that customer demand, the reservations are higher than what Lucid can produce right now. But that gap has decreased, right? And this analyst from B of A is saying, hey, look, I know you guys have improved your production. So I know production is not the problem. So if the reservations are declining, that's because consumer demand is declining. Okay, so the CEO now jumps in to say, remember that a reservation doesn't guarantee itself translating into delivery. These are non-binding reservations, so you can't bank on them automatically becoming delivery. So consumers might make a reservation to buy a Lucid car, but then when it comes time to actually buy it, to say, you know what, no thank you, we changed our mind, we don't want to buy it anymore. So a lot of this has been happening across the board. It's not just with Lucid, Rivian, Tesla. They've been reporting declines in customer reservations, and investors in those companies are also curious about declining consumer demand. So this is not just an issue with Lucid, it's an issue across the board with EVs that, consumers were really interested in buying these, a year ago when gas prices were much higher, when they had their stimulus checks, when the economy looked brighter, when job losses didn't begin, when the Federal Reserve hadn't really aggressively started raising interest rates just yet. So a lot has changed in the macroeconomic environment that's understandably decreasing consumer demand for these, what are likely very expensive electric vehicles. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So the B of A analyst asks a follow-up saying that you guys are emphasizing your technology and the advantages, which is pretty impressive. What kind of opportunities are there as far as licensing this technology instead of just using it only in your cars? Can you sell this technology to other vehicle manufacturing companies? So the CEO saying there's widespread recognition that the technology is the best, and that's being recognized widely. And so, yes, we'd like to make our technology available to other automakers and customers, and not just automakers. But it's not been a priority right now, and we haven't been going out to lobby for licensing agreements with our technology to other automakers. We've been very passive in that respect. So, in other words, the CEO saying that this is a possibility, this is something we would like to do, although this isn't something we have been focused on just yet. So maybe down the line we will focus on that, we will try and do that, but for now we're not focused on that. This is just an opportunity that's available to us. All right, in the next question coming from James from BNP Paribas asking, just another way, more bluntly, the 10,000 to 14,000 production guide, is that a deeper reflection of underlying demand as opposed to any limitations on the ramp to production? So in other words, James is saying, hey, you're planning to produce just 12,000 cars this year. Now we know that production is not a limitation anymore. So is this just, the fact that you're only going to produce, let's say, 12,000 at the midpoint, does that reflect a really decreasing consumer demand? And the CEO saying, certainly, your math is irrefutable. So your math is right. But, and then the CEO saying, my focus is on sales. And here's the thing. So we need to amplify our focus now away from production because we've been so focused on removing these supply chain constraints. Now we need to focus on amplifying customer awareness that we've got this incredible car with unprecedented range and technology and efficiency. So the CEO acknowledging, yes, that consumer demand is the problem right now, is the constraint right now, and they are going to shift their focus away from easing and solving supply chain problems to now stoking and generating consumer demand. And then the CFO also adding that some of their reservation holders are waiting for a very specific configuration that Lucid is not yet providing. So those are not those reservations that they have, the 28,000 are not turning into sales just yet because Lucid is not producing the specific models that consumers are waiting for. And I'll finally end on gross profit. The James is asking a follow up about gross profit, and the director Lawrence Sloan coming in and saying, we're really proud of the actions that we took in terms of cost reduction. Freight shipping, inbound freight led to a 2.3x improvement, and then as we look forward to next year, we've identified several areas of reducing material costs. And then we also see some lessening of our need to be buying ahead in terms of the spot market. So last time this year, we were buying a lot of semiconductors ahead. And so those are all potential tailwinds now for gross profit margin in 2023. With that said, the company goes on to say, look, we're not going to share exactly when we think we're going to be gross margin positive because they're still really gross profit negative. But I think those are important factors into consideration when you're thinking about your model. So they're still losing a lot of money on the bottom line. They're still losing a lot of money in terms of gross profit, and they don't even know when they're going to be gross margin positive. For now, Tesla is the leader in terms of electric vehicle gross margins at 25%. Everyone else is trying to catch up to that and reach that. I don't know if they will be able to. And also, Tesla's gross profit margins are likely coming down in 2023. So instead of thinking about other car companies climbing up to reach Tesla's gross profit margin of 25%, I think I'm thinking more like Tesla's gross profit margins are going to come down in the teens, something like 15 to 19%, and then others are also going to slowly move up as well, likely meeting in the middle somewhere in the teens. I don't think a gross profit margin in the 20s is realistic to expect in the long run if you look at legacy car companies as an example of where gross profit margins likely settle at equilibrium, right, in the long term. All right, so I think this sheds a lot of light on what's going on and why everyone is talking about Lucid stock. A lot of big implications here, along with the guidance for 2023 of just 12,000 vehicles. That would be, more than that would be roughly triple the 4,000 it sold in 2022. So tripling is nice, but investors were expecting more from Lucid because it's, so little. 12,000 for the year would still not be that much compared to other EV producers. So they were hoping for better, and maybe they will deliver better. Maybe they, the guidance is for 10 to 14,000. Maybe they deliver something above that range. Maybe they deliver 16,000 as better than expected macroeconomic conditions result. So that's something we'll be looking out for. So if you like this video, I've got others that I've hand selected that I think you'll enjoy. So please click on one of those and I will see you over there. Thank you so much for watching.